All right, banks are actually blocking the use of crypto, and we're going to dive in to this today. My name is Paul Barron. Welcome back to TechPath. Of course, when you look at the banking system, there's two players that seem to be emerging. You have the player that is looking at crypto maybe as a threat, and then you have the guys that maybe are looking at crypto as an opportunity. Joining me today is my co-host, Lisa Francoeur. Great to have you, Lisa.
Well, thank you, Paul. Always a pleasure.
Okay, so let's jump into it. Tell me a little bit about this first story you have, and where is this going?
Well, this is a very significant move on behalf of the European banking system, the banking authorities. The FCA is warning specifically that, Binance markets, they are not compliant. And this move is significant because of the fact that you're starting to see a lot more regulatory involvement. Crypto has been very much the Wild West globally. And now with central authorities doing what they can to ensure that their presence on the regulatory front is felt, you're seeing actions like this. But there's really two schools of thought, and we'll dive into the entities that are embracing crypto momentarily within the banking industry. But yeah, Paul, this is a very, very telltale sign of what folks need to be paying a lot of attention to, and that's regulatory authorities intervening, intercepting.
So Barclays basically reported it no longer supports wiring funds to Binance, one of the largest cryptocurrency exchanges, obviously, in terms of daily volume. The bank announced its issues with wiring funds to Binance in a resolution message to customers. To me, this is a big deal because this would be like Bank of America here in the United States saying, listen, you can't use your money the way you thought you could, use it for anything you want. Instead, we're going to tell you what you can use your money for and what you can't use your money for. And by the way, you can't use it in a crypto exchange. Of course, here in the US, I think with Coinbase being the largest crypto exchange versus where you see Binance in Europe, which Binance has kind of been in trouble in a lot of countries in terms of regulatory issues. So I think there is a little bit of a fluff there. Would they have done this to someone like Coinbase? Maybe not necessarily, but the fact that Barclays did this is pretty astounding, and it's pretty astounding.
It's very nerve-wracking because deposits and withdrawals in the British pound are banned. It's also important to note that Japanese authorities issued a statement as well saying that Binance is not authorized to operate in Japan either. Yep. So you're starting to see a lot more, particularly with Binance. I think there's a lot more resistance for that crypto exchange. And here in the United States, there's investigations underway as well. Binance has a separate site, it's important to note, Binance.us for American customers with fewer features. They don't have all of the bells and whistles. But here's the caveat. The IRS and the Justice Department want to know if U.S. residents are using cites, Binance's international services. And if that's the case, then you can fall into a pretty sticky situation as far as the legal implications of that.
Yeah. And for our viewers, just for some of you, maybe you're using VPNs to trade in platforms like that outside the U.S., which in essence are not legally used or available here in the United States because they haven't gone through the regulatory, loopholes that they have to jump through to basically be available. That's why Binance US was actually formed, so that crypto trading could happen here in the United States. So if you're using Binance here in the United States, you should be using Binance US, not anything that is overseas. And then, of course, there are some exchanges that have not been legal here in the US, and also even some token projects that are not available in the United States as well. I wanted to go back to this story. Barclays says it's not the first bank that has acted directly by blocking payments to crypto, so that's nice. Last month, NatWest also established a limit to daily transfers, but it was a limit on daily transfers to crypto exchanges, this due to the alleged fraud numbers that were going in association with, a lot of these operations. Listen, if there's a fraud issue, okay, I can get that because I do want my bank to protect me for fraud scenarios. It's much like what we see here in the US with fraud. I mean, they shut down my debit card all the time because of potential fraud scenarios. So I do get that completely. Where I kind of push back a little bit is when a bank comes in and says, you cannot send it to a place. So they're assessing, one, that Binance is a fraudulent, or maybe a Binance has not met regulatory means, which I can understand. There's a certain element there. I just wonder whether or not Barclays is going to do this with other exchanges there in Europe. Have you seen any indication that they might?
I think that there's been a lot of controversy surrounding crypto in Europe, and Europe has been very vocal in that the nefarious, the nefarious use cases associated with crypto have been a huge deterrent. And the reality is that, fraudulent practices pervade every aspect of the monetary system, because where there is, where there are loopholes in the system, where there are opportunities to fund money to suspect activity. I mean, it's going to happen, whether it's crypto, whether it's fiat, it's bound to happen. But I think Europe has been the most aggressive with respect to the regulatory and compliance actions that they're taking. But let's be honest here, in the United States, we are in the midst of I don't want to call it a witch hunt, but we are in the midst of a very, aggressive desire to wrap our regulatory hands around crypto. It's important to note that, crypto, Bitcoin, for instance, is deemed a commodity. It's not deemed a derivative. And as a result, it's not beholden to the same, compliance and regulatory policies associated with how the SEC governs a derivative.
Right.
However, this is a gray area because the regulation is still in the midst of being developed. And, one thing I'll charge the crypto community with is be involved. This is a critical point in time, because governance is something that we have the opportunity to petition. We have the ability to influence, and I think that it's our responsibility to be more involved in reaching out to governing authorities and helping them understand, what is crypto? What is the underlying technology? And another thing I'll add that is also important to note is when it comes to nefarious acts associated with crypto and, these suspect activities. The truth is that in the World Economic Forum released a report that speaks to the percentage of transactions that are categorized as suspect. It's less than, 10%. And so with that understanding, I think it's important to note that we have to be very mindful of the perception that's being created around what is crypto. Each of us should be doing our due diligence, but our job here is to ensure you have the information so that you can make wise investment decisions.
Yeah, and I think a lot of people get lost that, we've had literally a fiat system for 100 years, and the amount of money laundering and nefarious activities that happen through the fiat system predating what's around with crypto. Crypto, of course, is a little bit different in the sense that you've got blockchain, which essentially is actually a little bit more traceable, well, quite a bit more traceable than pretty much any fiat out there. So there are scenarios that, and I do get into conversations with people all the time on this, is that, blockchain is, or Bitcoin is for criminals, and you get those kind of scenarios. That's just unfortunately the FUD and the undereducated out there not really understanding where this is going. So much so, I want to jump to this next story, and this is a merger with PNC. Okay, so PNC is a huge bank out of Pittsburgh, and essentially the reason this merger was important, at least for when I was looking at the storyline up today, is this acquisition right here of BBVA. Now, BBVA is a very interesting organization. They're mostly in the central US, Texas, et cetera. And I found this very interesting. I want to jump to a statement that their CEO, BBVA CEO, it's this guy right here, Onar Jenk. So basically he went and it was reporting at a conference, basically says he stressed that this advice based on trust and knowledge of an expert, that though the use of technology and data, banks can improve the value they deliver to clients. And he dubbed the climate change one of the biggest disruptions. So obviously that has a little bit of a play in the sense of where we've seen ESG, environmental, sustainable, and governance going around Bitcoin mining, which of course China has of course kind of removed that whole scenario. There's a bigger picture there. If you guys have not had a chance to watch our digital yuan video, make sure and check it out. But Lisa, when you look at banks like Barclays, who's saying, hey, listen, we're going to ban the use of of any monetary or fiat funds to where you can even trade with these rogue entities like a Binance. And then you have companies like PNC who are acquiring very digital forward operators like BBVA. That's a completely different message of, hey, we think technology is going to be the future, and we do think digital assets are going to be a big part of it. What are your thoughts on banks moving in this direction in the coming years quickly into where we actually can trade crypto, maybe down the street at our PNC branch?
I think that a crypto-friendly policy makes all the sense in the world. You're talking about an industry since its inception 10 plus years ago that has, without any marketing, without any promotion, you're talking about, a multi-trillion-dollar industry. And I think that because retail investors were at the heart of driving the industry forward in the early stages of crypto. Now you're starting to see institutional money come into the marketplace, flood the marketplace. You've got $100 million from Mass Mutual. You've got Grayscale creating, funds so that folks can invest and be shielded from some of the volatility associated with these, super volatile assets like a Bitcoin. But I say that to say I think that retail investors are driving demand. And,
Right.
the cat's out of the bag. We cannot, turn back the hands of time. People recognize that cryptocurrency, especially when you think about something as simple as a savings account, your traditional banks offer less than 1% versus crypto. You can get double-digit returns. I think that there's a burning desire for folks to have access to these resources. And quite honestly, they're expecting their banks to answer the call. So I think that this is a very wise decision. And I think that you're going to start to see more banks adopt a crypto-friendly policy because let's face it, custodying crypto, that's another asset class. If it's not, if it's not X bank, it's going to be X exchange. So there's a lot of money being left on the table. And I think that if banks are not answering that call as well, you're going to start to see redeployment of capital. And, banks, their relevancy, because now you're starting to see more competition, they have competition. So I think that this is a really great move for capitalism and capital.
Yeah, no pun intended. All right, so let's cut over to this story right here, the continuation of the story. The BBVA CEO, this is basically what he said, banks must navigate the path of transformation by accompanying their customers and providing them with everything from the most basic services, transactional, et cetera, digital channels, to more advanced ones such as the possibility of making digital sales and acquiring new customers via digital, and ultimately offering leveraging of technology and data. I mean, this sounds all like crypto is in the cards for both BBVA, and since BBVA being acquired by PNC, they could be one of those banks that jumps out in front and says, hey, listen, we're going to make crypto available. You can do it. You can put a trading account in here, much like what TD Ameritrade does with their current, scenario. What are your thoughts on bank philosophies like this who are pro-digital assets, pro-digital transactions, which eventually at some point will include cryptocurrency?
As I said, I think that it makes all the sense in the world. The truth is that retail investors have been the driving force behind what and how the crypto industry has become an industry. And so it wasn't until I would say, Q4 of last year that you started to see institutional investment, flooding the market. But the truth is that, retail investors have been the folks leading the charge with respect to adoption. So I think that, banking institutions that are, wanting to remain relevant and a banking institution of choice are going to need to demonstrate that they have the, innovation and the vision to adopt accordingly.
Yeah, I think the scenario is this. You've got world banks that are kind of moving in the direction of either defensive positioning and posturing. You've got U.S. banks who have kind of looked at this and said, wait a minute, there's an opportunity here, which I think is going to be a big deal. And then you have, sovereign nations. You've got El Salvador already making the move to legalize tender in Bitcoin. You've got the United States looking very feverishly, I think, at a digital currency now because of the movement that we've seen with China and the digital yuan and their whole strategy, what they're doing. And I have a whole theory on that we've done a partial video on this, that China is really making a play for becoming the world's reserve currency as the digital format of the digital yuan. And if you think about this, world reserve currencies have only been lasting about 50 to 100 years each. The US dollar is now over 100 years old in the sense of, and all of these currencies have risen and fallen over time. Is China's move going to be one that will potentially position the yuan as the reserve currency in the future? That's going to be interesting to watch for sure.
Paul, I want to dig into that a little bit because to your point around the, dollarized economies, when you look at what El Salvador has done with respect to the dollar being legal tender, recognizing that the US dollar is in fact a inflationary asset. You've seen a number of moves that are pushing the inflationary aspect of the US dollar forward exponentially. We've had close to $6 trillion in, stimulus. We haven't created more value. We've printed more money. And this is a very detrimental position to be in because what is that going to do? Well, it's going to mean that your dollar is going to be worth less. And this also ties into the story of, banking, the banking industry embracing crypto. When you're thinking about how do you hedge against inflation, well, deflationary assets like Bitcoin, which has been the best performing asset class over the past 10 years, is very difficult to argue that this doesn't make business sense. This doesn't make business sense for a retail investor or an institutional investor. When you see that the value of your money is decreasing over time, and percentage-wise, I think the dollar has been losing, there's been percentages lost each year. These are very disconcerting indicators, and I think that we all need to be preparing ourselves accordingly. So I pose the question to the audience: what is your, deflationary hedge? How are you combating inflation?
Yeah, for sure. And definitely drop your comments below in the video, because I think a lot of times when we're looking at ideas and also how our audience interacts with it, for sure, you guys leave your comments below. Last point here is consumer trust in banks. I want to jump to a research dive that we did on this. This blew me away, and this is in sentiment, trust in WUSD, and then trust in W crypto. So essentially what we're looking at on this is Bank of America, PNC, Wells Fargo, JP Morgan, and Citigroup, which essentially have and you can kind of see the trends there going on Bank of America going slightly high and down a little bit on when you look at trust in crypto if someone were to actually trade crypto at Bank of America. So they're not so much. PNC, a little bit higher. Wells Fargo, definitely no trust in crypto. JP Morgan a little bit higher, and then Citigroup a little bit higher. So what was interesting to me was just the point that people were interested in their banks offering crypto in the first place. And then some of these major players like JP Morgan, Citigroup, et cetera, where people were, they're okay with dollars and they're okay with maybe even a potential digital dollar. But when you get into crypto, that was a big issue on some of these scenarios. So it was kind of interesting to see some of this data flow in. We definitely want to get you guys, of course, involved on any topics in the future. So we'd love to see your notes and your ideas. You can send that to us over, which is just producer@reverendnetworks.com. If you're listening in over at the podcast right now, make sure and tune in. And of course, give us some stars. That's one of the ways we get feedback. And of course, you can always hit me up on Twitter @PaulBaron. Hey, Lisa, it was great having you on. We'll check you later.
Paul.
All right. All of you guys, make sure and subscribe if you're listening and watching right here on YouTube. Hit the like button. And of course, we'll catch you next time right here on TechPath.